Hey, this is Danielle. Welcome to the free video. So today I'm going to be talking about a short in Boeing for a variety of reasons. Number one, I just think they can't get out of their own way. Number two, I have the statistics to support it in that it normally drops quite a bit prior to earnings. Yes, we have already completed, about a week and a half or so of time prior to earnings, but there's still time left because this thing isn't reporting until the 27th. And that means that with this squeeze setting up and this low right here in place, we definitely have a downside target. So when I'm looking at Boeing in general, they've only beat estimates 3 out of the last 8 quarters, which is a pretty poor showing. And I will point out that, the last 3 quarters in a row, they did trade higher marginally, but they really couldn't use any of those reports to shift patterns to the upside. And even though they marginally traded higher after earnings, they ended up just rolling right back over. So for all of those reasons, looking at this to break lower, I think that it makes sense to target a return to this previous low at 168 or a move into 160. Now, like I said, the earnings report is going to be on the 27th. So there's a couple different ways you could trade it. Number one, the easiest thing to do would just be to sell some calls on it. That would be right here, the week before earnings, not in the same week as earnings. You don't want to sell options in an earnings series. So just selling the straight calls, something that you could do if you know how to manage that risk. If you want to do it in a risk-controlled manner, the better thing to do would be to look at a spread. So you could do something like, 175, 180, getting a credit of 212, not bad. 175, 177.50, credit of 115 I think is a little bit better because then you are getting a 1-to-1 risk-reward ratio. So you could do it that way. If you want to give yourself a little bit more time and look for the IV expansion into the earnings series, you could buy some Delta 70 puts. So that would be right about here, these 185 puts, right about $13, a little bit more than $13. And then basically you'd be targeting, another $10 move at least to the downside, if not $15. So either one of those options I think is a fine way to trade it. I like it. I think it makes sense. I think that the transports overall have been really weak. I think that the transports basically have been hanging off a cliff, and it's a cliff they're probably going to fall off even further, especially in light of this weekly squeeze and broken down weekly chart pattern. So that's about all I have for you here today. If you want to join Mary Ellen and myself on Wednesday, I'm just going to be introducing her. She's a great member on our team. She has been doing investing for a long time, about 25 years of experience building long-term portfolios. She used to manage a fund, all that kind of stuff. So if you want to learn more about how to make some picks in this overall market environment for a stock portfolio, go to simplertrading.com, click right here, register now, and we'll see you on Wednesday. Other than that, have a great rest of your day, and I will see you soon.
Hey traders, it's Danielle here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to like and comment down below. Also, be sure to subscribe and click the bell icon so you will never miss the latest take from our trading experts. Did you know that we provide real-time trade alerts so that you know exactly what we're doing, exactly when we're doing it? Go to www.simplertrading.com to learn more. Good trading, and we'll see you in the next video.